So, hello guys, welcome to Degen Radio. We're starting this new model of recorded interviews for YouTube, also maintaining the weekly Twitter space. I'm here with my co-host Thiago, and we're very honored to have Teddy from Notional Finance as our first guest. So, thank you very much for being here, Teddy. Uh, so, to begin with, can you make a brief introduction about you, your background? How did you get into crypto in the first place? And what motivates you to found a DeFi project?
Yeah, I'm Teddy. I'm the co-founder of Notional, and my personal background, I started my career as a trader. So I traded a derivative called interest rate swaps. If if you're familiar with that, I worked at an investment bank, Barclays, for about 4 years, and then left and moved into a sort of a family office slash hedge fund to trade crypto in 2018. So basically, I got in like right at the peak, and rode the whole wave down for the next like 18 months, which was not great.
Yeah.
But I really like I really liked crypto, and I liked the space, and I knew that I wanted to stay here. And so basically, I was looking around towards the end of 2019 for something to do, and that I wanted to stay in crypto, and I wanted to start my own company. And so at the time, DeFi was like, it was basically just starting, and it was super small, but it was also like the only thing that actually worked in blockchain, like at all. And I thought it was really interesting, and it made sense to me. And so I decided to jump in, and I thought that a big opportunity was going to be the ability to sort of lend and borrow at fixed rates of interest, and just in general like improve the quality of DeFi lending infrastructure. And so that's why I started Notional with my partner Jeff, which is a fixed rate lending protocol. So we started building in January of 2020, and launched Notional V2 about 18 months ago. And we've done, I think something like $770 million of loan volume so far. And we're, currently at work building Notional V3, and we hope to launch that pretty soon. And there's a lot of exciting stuff coming there. So that's kind of the quick background.
Nice. The first time I used DeFi, I was like astonished too. Was like just was so simple and so was working so smooth, like smooth. But yeah, it was pretty cool. I was like impressed by it too. So Teddy, for those who aren't familiar with Notional, can you give like a brief overview on how the protocol works?
Yeah, so at the core, Notional is a fixed rate lending and borrowing protocol. We offer, people can lend their assets at fixed rates of interest on Notional for up to a year, depending on what currency you select. So right now we have USDC, DAI, ETH, and wrapped Bitcoin on an ETH mainnet, and you can get fixed rates of interest on all those assets. And you can also borrow those assets at fixed rates of interest. And that's where the yield comes from, is from other people on Notional borrowing against collateral. So just in a real quick nutshell, Notional V2 is a fixed rate, over collateralized lending protocol.
Oh, very nice. So, and this brings to the next question. So, how do you see the current landscape for fixed rate in crypto in terms of adoption, regulation, growth drivers? And also, if you can point out the best use case for this financial tool in comparison with other lending protocols that use variable rates, because I saw in a bunch of interviews that maybe DAOs can be a very good use case for treasury management. Instead of like dumping tokens, you use debt to all this. What's your point on this, Teddy?
Yeah, so I would say like the fixed rate ecosystem, there's a couple protocols. So Notional is the largest fixed rate lending protocol, but there are others, and we've sort of been around building. The fixed rate protocols generally started around a similar time. So sort of 2020, 2021 is when most of the fixed rate protocols started. And we've sort of really, like, I would say we've been struggling because the model is like, it's very complicated. So it's hard to get right, and it takes a few tries. I think that I would say Notional has actually just recently like really hit on the first really killer use case for fixed rate borrowing. And that's actually this product we launched called leveraged vaults. So what a leveraged vault is it lets you borrow from Notional, borrow at a fixed rate, and then put that capital that you borrowed into a vault that automates a DeFi yield strategy. So for example, just to that's complicated. So, to take an example, on Notional, you can borrow ETH at a fixed rate and then take that ETH, deposit it into the ETH rep, staked ETH balancer LP pool, stake your LP tokens on Aura, and then harvest all the incentives. So basically you get highly levered exposure to that yield strategy. And the reason why this is, like, I would say the killer use case for fixed rate borrowing is because the difference between the borrow rate that you pay and the yield that you earn on the strategy is pretty small. So if you take like 10x leverage and then your borrowing rate spikes and all of a sudden you're paying more on your borrow than you're earning on the yield strategy, all of a sudden you're losing like a lot of money, like very quickly. And so the risk of using a variable rate borrow when you're doing a highly levered like yield strategy with a relatively small profit margin just is like really, really big. And fixed rates allow you to hedge and minimize that risk. So you can focus on, just like all you have to worry about is what is the yield on the strategy going to be, not what the rate you pay on your borrow. So I think like that's really the killer use case in DeFi today for fixed rates. And Notional V3 is going to expand on that and really kind of lean into the sort of like, we're making something that is sophisticated and it's for the pros. And basically what you're going to get with Notional V3 is you're going to get a system and a protocol that is like complex and sophisticated, but it's powerful. And if you use it, we're going to show you all the detail, and it's not going to be like super simple and easy, but it's going to allow you to get really high efficiency on your capital and get the most yield that you can possibly get.
That's pretty interesting. And like how you said, like DeFi today, like the fixed rates and protocols like didn't get that much adoption. I think like one thing like to take a look is this not so sexy as like for Degens. So like the Degens rather use some like new mechanics like complicated polynomial stuff. So I think one issue that we had with fixed rating is that wasn't sexy, but like these supercharged vaults, like gonna say like that, for like with fixed rating gonna be really cool for like institutional players and for Degen players too. And so
Yeah, I just before you move on, I totally agree with you. So like I think that was like one of our biggest problems is like, you know, like it's like it's like not sexy when like for if you're talking about like, oh, I want to borrow at a stable rate to buy a car or something.
Yeah.
Very, very few people actually do that. And so you have to like be honest about what people in DeFi actually do and what they want and what they care about. And like that's why I think that what I just talked about is the really killer use case for fixed rates, because it's directly focused on like, you know, being a degen and getting leverage. And like what you see is that actually when you do that, it's actually a lot better to use a fixed rate. And like I think that appeals to the user base. Yeah.
Yeah, it's like it's gonna be pretty interesting. Like Gustavo mentioned one thing about like DAO treasuries taking like fixed rated borrows, so like it's like predictable. It's like it's better for a company to manage that debt when you know when your future debt will be. So are any DAOs approaching you guys to like try to do something like that, like borrow at fixed rating? You are you hearing something like about it in the industry right now?
Yeah, I mean, I'm hearing about it like a little bit, but honestly, like I'm short, medium term bearish. Like I just like I don't think like I think that the reality is that when you talk all right, so there's two ways to fund something. You can either borrow the money or sell equity, right?
Yeah.
And like borrowing is, so you just think about if you're a lender, like why would you choose to lend versus buy equity? Like if you lend, you're getting at max the interest rate that you charge, but you're risking your entire principal, right? So you only want to do that if it's safe. If you have like are very confident that you're going to get your money back, right? And the way we make people confident is by giving them collateral, right? Uh,
Yeah.
and if what you're doing is risky, you want to make upside if it goes well. And I think just the reality of the matter is that like these DAOs, like nothing in crypto is safe enough. Like very, very, very few things are safe enough where you want to finance them with debt. Like
Yeah.
equities or equity or tokens, right? Like that kind of payoff profile is just appropriate like here. And it's just for borrowing to make sense for a DAO or something, they would have to have stable cash flows. Like they would have to actually be making money and then borrowing against their future earnings, right?
Yeah.
But like very, very few DAOs have any stable cash
Yeah,
flows. It's just too early. Yeah.
And most of
and
them, they
this
don't
is
have like a very stable or even very organized treasury and management risk, like you said. So most of the time, they're just like holding their governance tokens and dumping the market and generating this cash flow. So, but like you said, because in the traditional finance, you have like for 10 years, people are borrowing at zero rate. So n- 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 like was free money almost now. So in crypto you already have this, your collateral is always in risk in terms of because the volatility. So that's a very good point, Teddy. And I'm gonna bring to the next question about the improvement. So from the V1 to V2, there's these improvements of the N token, so you provide more liquidity and so on. But the version 3, how do you see even more improvement for the end user experience, and when do you expect to migrate and deploy to the new contract?
Yeah. So I think there's uh, that's a good question. So I think there's a few things to talk about here. There's like kind of maybe the more boring and technical stuff that I can
Yeah.
definitely talk about that too much. But the I'll just give like the sort of overarching what we're thinking about with V3. So really we want to lean into this idea that, Notional is for like DeFi for the pros, right?
Yeah.
And like what that means is efficiency, automation, and leverage. So like today, DeFi infrastructure is highly manual and inefficient. And so if you are a user in DeFi that you're trying to earn yield and you're trying to go sort of above and beyond, so not just like, lend on Aave and get 1%, right? But like trying to like make the most out of your crypto. Most yield strategies in DeFi like aren't optimal because they don't allow you to take leverage. For example, if you want to provide ETH to like the ETH R ETH balancer or a liquidity pool, there's no way you can leverage that. Like, there's no way you can borrow against that position and leverage that strategy, and that's like really inefficient. And additionally, like there are some lending protocols that allow you to borrow against some of these kind of staked LP token positions. But that process is highly manual, inefficient, time consuming, and expensive, right? So for example, if you have staked LP tokens on Aura and you want to use them as collateral on a lending protocol, usually the way the process works is that you have to like, provide the initial liquidity, get the staked LP tokens, transfer them to the lending protocol, deposit, borrow against them, go take that capital that you borrowed, put it back into this like LP pool, and then you do like all the looping transactions. And it's like a huge like waste of both time and transactions and gas. And, kind of even beyond that, like there's also no way like to see the risk of what you're doing and manage it. And I think that like, and then finally, the existing leverage options, as I've just talked about, are all variable rate, right? Which means that like you have this additional risk of like the rate on your borrow spiking. And, people might say, well, rates aren't actually that volatile, like, but they're looking at Aave and Compound. And those are protocols that don't offer you leverage on these like yield strategies, right? If you're looking at a protocol that does offer you that leverage, those variable rates are super volatile, right? So it's just like not. So what I'm trying to say is that the existing options for people that want extra yield through leverage in DeFi are really like bad. And so with Notional V3, like Notional's leverage vaults like allow you to automate the entire process. You can choose your strategy, choose the leverage, and see the risk and put on the position all in one place and all in one transaction, right? And then the vaults are fully automated. So that means that like instead of claiming and selling the incentives yourself, like Notional automates that process for you. So all you have to do as the DeFi user that wants to maximize your yield, all you have to do is choose the strategy, decide on the leverage, and then press the button. And that's it. And then Notional does everything else, right? So really it's when like, again, I can talk about what's new technically in Notional V3, but really what we're trying to do here is create like the best solution for people who want to get the most yield out of their assets in DeFi and like want to do it in a way that's precise and well put together. So that's like something that's like good enough for the pros. And so that's what we're building.
Yeah, that's pretty cool. So, Thiago, another question?
Yeah. Like this is something I'm looking forward to try it. And like the next question is like when are you guys intending to launch V3?
Yeah, so we're gonna launch V3. So actually, V3 is already okay. So we got V3 out of audit last week. So right now we're sort of looking at the issues that the auditors raised and making those fixes. And then really from here, all that's left, once we fully respond to those issues, is the V3 UI. So that's currently a work in progress. Now, we expect to launch V3 publicly later this summer. Maybe July or August, probably more like August. And before we launch V3 publicly, we are going to have like a early access beta user period where V3 is going to be live on Arbitrum, but you'll have to it'll be invite only to use the UI. So we do plan on having that before we do the full public launch on both Arbitrum and the Ethereum mainnet.
Oh, nice. Yeah, my next question would be if you guys planning to expand to other chains, but you just said Arbitrum. So why you guys choose Arbitrum, and are you guys planning to go another chains if you guys can hit a great success on Arbitrum?
Yeah, absolutely. So we chose Arbitrum, I think primarily so there's a couple reasons. So it was so for one, it's the most active. It has the most active DeFi community of all the Ethereum L2s. It's got the most TVL and just generally the most user activity. So that was probably the most important thing. But also it is the easiest thing for us to do because the leverage vault strategies that we've already written, we can reuse them on Arbitrum because curve, convex, and balancer are all on Arbitrum. So it's like a natural fit, and it was the least friction and just the most activity. And then also another protocol that wants to integrate with Notional called Contango is on Arbitrum, and we want to be able to integrate with them. And they're a cool protocol that's launching. What they offer is expirable futures trading. So trading ETH/USD expirable futures by using a fixed rate lending protocol underneath.
Oh, that's very interesting. Yeah, that makes sense. Arbitrum today has a big growing ecosystem. It's like a hot chain right now. Pretty active, pretty good depths too.
Yeah, and we are going to go to. I'm sorry, I forgot the rest of your question. So yes, we are going to go to other chains as well. Definitely. I mean, I think there are opportunities that are on other chains, and we want to capture those. It's just a matter of engineering resources. But I think honestly, once we, the hard part is building and releasing V3. I think actually expanding to other chains and listing assets, that's actually easier. So, we expect that once we launch V3, we'll be able to sort of pivot to growth. And I'm really looking forward to that.
So Teddy, you mentioned that when a DeFi project goes multi-chain, in theory, are you adding more complexity because you need to manage different smart contracts in a bunch of different blockchains that have their own security problems sometimes? How does it work? And because I see a bunch of DeFi projects launching 20, 15 networks. So how is the workflow to manage this?
Yeah. So definitely the marginal work is not zero. But it's not huge, but it's certainly not zero. And that's a valid point. So yeah, so I basically what it looks like in practice is the Notional, the C Corp, we run liquidation infrastructure on Ethereum mainnet. So for every asset we list, we have to be able to liquidate it, and we build that into our own internal liquidation infrastructure. And then for every leverage vault we list, we need to be able to liquidate that. And then beyond just the liquidation, there's just a lot of risk monitoring. And yeah, that has to expand with every asset, with every vault, and with every chain that we're on. So yes, it is increased, like I suppose, maintenance burden or risk burden. But it's also like, it's not that much. So it's not like having, being on Ethereum and Arbitrum is not twice as much work, right? It's like, maybe an extra 10%. Yeah.
Oh, I see.
Yeah. So like it's a decent, like it's little work, but like that will pay off big probably. So Teddy, yeah, you said like after you deploy V3 on Arbitrum, you guys will go on growth mode. Yeah. So people in crypto in DeFi usually likes like shiny new objects, and like your guys protocol is like a more of a OG protocol. So do you guys like planning on doing some revamp on tokenomics, like to gather attention and incentives? Because like even if you guys being like an OG project, you guys are innovating quite a lot now. So are you going to innovate in this field too of the tokenomics of Notional?
Yeah. So I think yes. I mean, in short, yes, we will. I think that we haven't. So right now, like we haven't put a huge amount of thought into it yet, because basically we're just focused on shipping Notional V3. But we have thought that I think that revamping the note tokenomics, in addition to our, path to decentralization, and just kind of like hammering out those details, is going to be the next big thing that we do. And we've started thinking about it a bit, but like we haven't made any firm decisions there. But yeah, I mean, I think like, it's important. So it's important. So it's important for a number of reasons. But one of them is that like, one of the best marketing and sort of go-to-market and growth strategies is like your token, right? And I think that's just like, that's just 100% true in crypto. And, because it's like people, if you can get people to hold your token, and then they'll start making noise about your protocol. And it's like, it really helps, like, and it gets people like on your side and pulling for you and talking about you, and like, and especially if the number goes up, right? Not like, they talk about you when the number goes down too, but it's not,
Yeah.
it's less good in that.
It's the only thing they're seeing. Yeah.
It's not that good flywheel that generates when prices go up.
Yeah.
So so we are, and just like what we are kind of thinking about, like, potentially a VE model. And part of the reason is like, we have seen that be successful, but also part of the reason is that I really like the idea of like people like, so someone's say in decisions that the protocol makes is magnified by their level of commitment. I really like don't like the idea of someone, and this happens all the time, and like someone that like buys some tokens and then 2 days later is telling you what to do, and then like when you don't do it, 3 days later he doesn't have the tokens anymore. He sold his tokens, right? And it's just like, that is like so common, and that really, like, I hate that.
Yeah, it's a predatory capital. They're just pointing and circulating this supply and liquidity, and they go to another ship. That's how the DGEM culture functions.
Yeah, the VE actually helps to prevent governance attacks, right? So like people won't buy the token, so vote in something that's like favorable to them or some protocol they invested in,
Mhm.
and like just they need to have skin in the game so they
Yeah.
can participate in governance. So it makes a lot of sense.
Yeah.
I like that model too.
Yeah.
Yeah.
And I think it's like, and I think, yeah, I mean, I think it's a good model, and like letting it have control over the protocol incentives is also good. Cause like, I think so you want like ultimately you want people engaged in the protocol. And I think that a lot of people struggle to engage in like the technical issues or like stuff that's like not, it's like not super easy to think about and like just engage with. And letting the token holders control the incentive missions and where they go, like which currencies get incentives and which ones don't. I think gives people a really easy and simple way to engage with the community, and then get them, it gives the token like immediate value, and it also just helps to create an engaged community. um, and it like helps, like other protocols, like, so, let's say like um, yeah, I mean, so like we could list some stablecoin, and maybe we don't take it as collateral on the protocol, but it's like, we've listed it, and this stablecoin has yield strategies that they want people to do in their ecosystem, and like, and we have a leverage vault that lets people do those yield strategies, but we don't have much liquidity for their stablecoin. Well, then they can buy, the VE notes and like direct incentives to their currency, and like that's
Yeah.
absolute. I mean, obviously, you guys know that that's something that we've seen with Curve and Convex, and
Yeah.
it's like a cool thing. Yeah.
Yeah. Now there's a rumors that gonna start the Pendo wars. Like the Pendo revamp their tokenomics to V module 2, and there's like some rumors in the like the Degen stuff people saying that they will start the Pendo wars too. Now we'll see.
I think it's an interesting. So my feeling about it is, I'm not so. All right. So I don't. I've looked at the Pendle thing, and I know TN, who's the founder there. With the Pendle wars, like, so a core thing about the VE thing creating a war or whatever is that liquidity on your protocol has to be strategically valuable. And like that's absolutely true with Curve, because like having liquidity means that your stablecoin is trusted. So it's like strategically valuable. But like it's not clear to me why having liquidity on Pendle for your thing is like actually, like, how does that really help you? Maybe it helps you a little bit, but it's like it's not as like important. So I'm just thinking about, from a protocol like myself, or like Notional, like, is that something we would ever want to, like, would that matter to us? It's not clear that it would.
Yeah,
Yeah.
it makes sense. Makes sense. Like curves like a big like a large like ecosystems of protocols that can be interested in like notional too, like with the leverage vaults and the fixed rating, like it can attract a lot of protocols and stablecoin protocols, some DeFi protocols to want to be there. Yeah, it like makes way more sense. I think thinking in my head right now, like to have it on Notion, something like Notional Curve, some liquidity protocols.
Yeah. So, Teddy, we're getting close to the conclusion,
Okay.
but as always, we do like on Twitter Space, but now we're doing with YouTube. Um, we always ask for the guests to do like relate and talk about some crypto trends or alpha where users need to pay attention, some advice for builders in the current moment in crypto, like with bear market. Is like, can you give us some alpha or even life advice for the listeners here to how to go in the crypto's current situation?
Yeah, sure. So I think that like the alpha I would give to people that are building in DeFi or looking at DeFi and thinking about what they might do is basically that, like, now is the time. Now is the best time to take a risk. Like that, like it is the best time. And the thing is, like, and so if you want to be like a founder, you want to be something here, people like a lot. All right. So if you want to capture the upside, if you think there's going to be another wave and you want to be a part of it, you have to take risk. There is no way around that. Like, you have to. And I think that now is the perfect time to do that. So I guess if I were, starting again, maybe I wouldn't do fixed rate lending because there's already all these people doing it and they seem pretty far along. But I would pick something that is on the fringe that, like, oh, that might make sense. And I don't know if it's gonna work, but like, it seems like a lot of these smart people are talking about it, and it's pretty new and unexplored. That's the thing. Like that's what you take a risk on, because like yes, it might not work out, but like that's the way that you actually capture the upside. You like have to take like a real risk, and it has to feel uncomfortable. And the thing is, that opportunity is there because very few people do that. So like, the reason that opportunity is there for you is because no one wants to do that. Like, very few people will take that risk. Yeah.
But Teddy, what's your opinion about like account abstraction? We are seeing a bunch of like crypto reports, and now the very close like update that Ethereum did recently. So, do you think account abstraction can unlock a lot of value for these DeFi projects in terms of user experience? Because you don't need to sign a lot of things. A bunch of like newbies users, they are very afraid to do all the steps when they're DeFi. If you can go and just like do 2 clicks and you ready to go, do you think account abstraction can be a very good unlock value for crypto?
Yeah, I do. I think it makes a lot of sense. I think honestly, it's like not my I would say it's like not my area of expertise, or if I were thinking about coming into crypto, it's not what I would want to do, because I have kind of a financial background. Like this stuff with account abstraction, I think is like mainly, it's obviously it's like an improvement that allows better UX, right?
Yeah.
And like that is not like my focus, but I do think it like makes sense as a growth area. And the other thing I was gonna suggest here is, I don't know if you guys have, I'll put a link, I'm gonna put in the comments, I'll put a link in here. But so Dan Elitzer on Twitter is, and Nascent is a notional investor. And these guys are like, so if you want alpha, like you should follow these guys, because they are like they are consistently early to the sort of new things that are going on. And I would specifically suggest people that are listening to this to look at this thing that they've been talking about a lot in the past few weeks, and that's Oracle free lending. And just like think about what that might be. And like, because now is the time, in my opinion, to like go and try and build something there, because like it's so new that no one has an advantage. It's like,
Sorry, I haven't heard about like Oracle freelancing. It's totally new for me. I actually follow them, but I don't know, like it isn't showing my timeline. So, but I have never heard about it.
Yeah, you should check it out.
Yeah,
I
people are
will for
talking about
sure.
modular stuff, restaking. There's a
Yeah,
bunch of new buzzwords coming in crypto. But yeah, but maybe that's a pretty good new trend. Now I think Chainlink has what 80-90% of market share in Oracle. So, and I see, for example, I'm an ambassador for a Polkadot parachain, and they're using Dia, another Oracle there. I think Moonbeam is the only Polkadot parachain that's using Chainlink right now. So I think Oracle can be a very good place for innovation. Yeah.
I think this like Oracle free protocols can be very good because back in the day when projects weren't using Chainlink, they were usually getting exploited. So yeah, it was pretty annoying. Like 2020, 2021, like there are a lot of exploits on the Oracle side. So it's it's for sure worth to take a look on this.
Yeah. Thank you, Teddy.
But thank you, Teddy. Yeah, I think we can end in here, right, Gustavo?
Yeah, yeah.
Yeah. So thank you, Teddy. And guys, nothing said here is financial advice.
Yeah.
So always good to put the disclaimer.
Yeah, always good to put this disclaimer. Yeah. So thank you, Teddy. Very good interview. A lot of alpha, a lot of explanations, and a little bit technical, but that's what our channel is trying to provide. So thank you very much for being here.
Thanks, guys.
Thank you.